There are over 4,800 fiat money currencies, so government-based currencies that no longer exist. But gold, they always then bring gold as a component of the new money in them. And they will this time because they're going to need to get the public confidence back again. And that is a big part of the problem. This is a con game. It requires confidence. When all confidence is lost, they got to bring back the gold.
In her recent video update, Lynette Zang, Chief Market Analyst at ITM Trading, delves into the current economic trends and cycles with a particular focus on the concerning state of the dollar. Zang highlights the urgent need for individuals to consider safeguarding their wealth by investing in precious metals like gold and silver. Recent pressures in the gold and silver markets are primarily linked to rising U.S. Treasury yields and a strong surge in the U.S. dollar index. Both markets have seen short covering, corrective bounces, and a noticeable trend of bargain buying after hitting 5-month lows during the week. Zang begins by emphasizing the inherent value of gold throughout history. Unlike currencies that can rise and fall in value, gold maintains its intrinsic worth as a tangible and real asset. Governments often turn to gold to instill confidence in new currencies, especially when trust in the previous monetary system had eroded. Zang posits that the transition to fiat money allowed governments and companies to manipulate economic conditions subtly. Fiat money grants central banks greater control over the money supply, enabling them to influence the economy's trajectory by controlling the rate of currency issuance. However, she warns that if the issuance of money surpasses the growth of the economy, the currency's future value could deteriorate substantially. Just before you watch the Lynette Zang's interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up. According to Zang, an unexpected crisis would catch many off guard, but those who have been vigilant and informed about the underlying economic dynamics would be less surprised. The New York Fed recession probability indicator shows there is still a 66% chance of a U.S. recession in the next 12 months. Other reliable indicators are flashing warning signs that the economy could still slump. Jobs data has started to fade. The yield curve remains inverted, and experts are divided on whether a recession may have been delayed.
Governments wanted to tax you without having to go through legislation so that you didn't know you were being taxed. And corporations wanted to pay their workers less money. But they knew that if you were used to getting $10, you weren't going to accept $5. But by putting inflation into the fiat money, that those entities could accomplish both of those things, because we have the almost invisible inflation tax. Inflation is not a monetary phenomenon. It is a fiat money phenomenon, because this is based upon debt. And when you have debt, what do you have? You have interest on that debt, don't you? So there's your inflation. This is savings, because it's real, it's tangible, and it's used in every single sector of the global economy. So it has the broadest base of demand and therefore the broadest base of buyer. This garbage is used in one place. And we've been taught, in the beginning, was money. Money was supposed to be a tool of barter. Okay, this mimics that. It was supposed to be a tool of measure so that you could have, the society could specialize. You could have a baker, you could have a farmer, you could have a lawyer, right? And it was supposed to be a short-term store of value so that you were always fairly paid for your labor currently, and a long-term store of value so that you could save that money, and then whenever you needed to use it, you were being fairly paid for your labor whenever you did extend that labor. But over the years, first the Federal Reserve took those 4 points, those 4 pillars of money, and only gold actually meets all of the criteria to be a good money. Silver is the secondary monetary metal, but only gold meets those criteria. This was designed to imitate it or mimic it. The dollar is strong against other currencies, right?
Exactly.
But in terms of purchasing power, look at my favorite graph. If you said to me you can only work with one, this would be the graph. It's the FRED, F-R-E-D, Federal Reserve Education Department. In the search bar, put purchasing power of the consumer dollar. And you will see how strong, not officially, the dollar is. So we know it's much worse than that. It's hanging on by a thread, but the entire system is hanging on by a thread. So a crisis happening tomorrow morning, it would surprise me because everybody's going to be surprised, but it wouldn't shock me.
Zang highlights the proximity of substantial financial challenges potentially arising around 2025. She underscores the importance of preparing for these difficulties in advance, noting that challenging times also present opportunities for strategic decisions with future benefits. The Federal Open Markets Committee projected a mere 1% GDP growth for the entire year of 2023 in June, indicating a potential significant slowdown in economic expansion. The FOMC acknowledged the banking crisis in early 2023, which led to tightened credit conditions. This tightening could potentially make it harder for companies to secure loans. Despite notable progress in curbing inflation, the rate remains significantly above the Federal Reserve's long-term goal of 2%. A Bloomberg Markets Live survey conducted in late March to early April revealed that 48% of investors anticipate a U.S. recession in the coming year, while 21% foresee it happening in 2024. Additionally, 15% of the 525 respondents envision a possible recession. In 2023, the U.S. faced a debt limit standoff that brought the nation perilously close to default, reigniting discussions about the future of the debt ceiling. Zang further reveals that she is prepared for emergencies by investing in gold and silver. Let's get back to the interview.
I've been stacking, I've always had a certain amount, but I've been stacking seriously since 2002. But I've got my bug out location, so I've also executed the rest of that mantra, but it was the gold and the silver that I did first because that can protect everything else and enable you in any circumstances to more likely be able to buy whatever it is that you need. But when 2008 hit, 100 bazillion%, I knew that the system that we knew died. I absolutely knew it. And people will say, well, how much gold and silver should I have? Well, if you're okay with losing all of this, then you keep it more in this or those products, right? But for me, personally, I'm not a 5%er or a 20%er. I am all flipping in because I lived in that world. I'm a technician. I know how to read the technical language of the markets. I know how to read these reports and understand what they're saying. And so me, I am all in. I own no other than cash, which I got to have, and I run a business, so there's a certain level that I have to have, but I own no stocks, no bonds, no ETFs, no mutual funds, none of that garbage. None of it. I am all in. The debt bubble has already been popped. When you know you're going to go bankrupt and you get more credit cards, and that's what's happened since 2008 with all the quantitative easing and all of that. And they talk about quantitative tightening. Well, the banks are now tightening their standards. Because this whole money system, is based on constantly compounding and growing debt. It's not based on paying the debt off. So the fact that the debt bubble has already been popped, that it has already been popped, yeah, we're at the end. We are 100%. There is not one doubt in my mind. I can't tell you it's going to be Tuesday morning at 8:35, but it could. It's over. It's done. Maybe we have until 2025 till we're like super in it. But the reality is it's already over. It's over. It's over. I don't know how to say it any other way than that. What do you want to do? When is the time to get prepared? The time to get prepared is now. And I'm not saying nothing's going to happen between now and 2025. I'm thinking that's when we'll be in the worst of it. And that's when the opportunities present as well. Never let a good crisis go to waste. Well, if you're in the right place at the right time with the right asset, guess what? You can take advantage of that.
In a world where economic uncertainty looms large, could her emphasis on precious metals as a safeguard and her proactive approach be the keys to weathering potential storms and seizing hidden opportunities? Let us know your thoughts in the comments. If you liked the video, please subscribe to our channel, and currently 93% of viewers haven't subscribed yet. Help us reach 3,000 subscribers.